The Minority Market. Episode 77. Combining Multiple Edges for Long-Term Success. Most beginners search for one perfect strategy. They believe that if they find the best indicator, the perfect pattern, or the secret setup, success will automatically follow. This mindset creates disappointment. There is no single magic tool that guarantees profits. The minority understands a deeper truth. Long-term success is built by combining multiple small edges that work together. An edge is simply an advantage. It does not need to be spectacular. Even a small statistical advantage, when applied consistently and with discipline, compounds over time. The mistake most traders make is relying on one factor alone, such as a chart pattern, news signal, or indicator. When that single factor fails, their entire approach collapses. The minority builds layered decision-making. Instead of asking only, "Is this pattern forming?" they ask multiple questions. Is the broader market supportive? Is volume confirming strength? Is this near a meaningful level? Is risk acceptable? Is my emotional state stable? Each layer filters out low-quality decisions. Think of trading and investing like stacking probabilities. One condition alone may give you a 50% chance of success. Adding another confirmation might increase that probability slightly. Adding proper risk management increases survival. Adding emotional discipline increases consistency. Together, these edges create a strong foundation. One important edge is market context. Trading in the direction of the broader trend increases success probability. Fighting strong trends usually leads to frustration. The minority respects market structure instead of trying to outsmart it. Another edge is risk management. Even the best strategy fails without proper risk control. Position sizing, stop-loss placement, and portfolio allocation protect you from catastrophic losses. Risk management does not increase profits directly, but it protects your ability to stay in the game. Time horizon is another powerful edge. Long-term participants benefit from compounding. Short-term traders benefit from precision. Knowing your time frame and aligning decisions accordingly reduces emotional conflict and confusion. Emotional discipline is a major hidden edge. Many people have good technical knowledge, but poor emotional control. Fear, greed, impatience, and overconfidence destroy consistency. The minority trains emotional stability as seriously as strategy development. Preparation is another advantage. Professionals prepare scenarios in advance. They know what they will do if price rises, falls, or consolidates. Beginners react in the moment. Preparation removes impulsive decision-making. Process consistency is also critical. Repeating a well-tested approach builds statistical reliability. Jumping between methods destroys learning and performance tracking. The minority sticks to a defined process and refines it slowly. Another edge comes from observation and reflection. Reviewing past trades, studying mistakes, and analyzing emotional behavior improves future decisions. Without review, errors repeat. With review, improvement compounds. Patience creates advantage. Waiting for high-quality setups reduces unnecessary trades. Doing nothing during low-probability conditions protects capital and mental energy. The minority understands that inactivity is sometimes the smartest action. Information filtering is another edge. Markets generate massive noise, social media opinions, news headlines, predictions, and rumors. The minority filters information carefully. They focus on data that supports decision-making, not emotional content. Long-term investors also benefit from combining edges. Strong businesses, reasonable valuation, industry trends, financial stability, and management quality together create durable investment decisions. Relying on only brand popularity or price movement creates vulnerability. Another important edge is adaptability. Markets change behavior over time. Strategies that worked in one environment may underperform in another. The minority adapts slowly and systematically instead of reacting emotionally. Capital preservation is the foundation of all edges. Without capital, no strategy matters. Protecting downside risk allows you to benefit from upside opportunities. Many traders focus only on profit targets. The minority focuses on building a sustainable system. Profits become a byproduct of good process rather than the main obsession. Combining edges also reduces emotional stress. When decisions are supported by multiple confirmations, confidence increases. Doubt decreases. Discipline becomes easier to maintain. This approach does not eliminate losses. Losses are part of probability-based systems, but it reduces large drawdowns and improves long-term stability. The market rewards those who think in systems, not shortcuts. It rewards preparation, patience, discipline, and consistency. Ask yourself, are you relying on one tool or building a complete framework? Are you chasing signals or developing structured decision-making? Are you focused on short-term excitement or long-term survival? The minority builds advantage brick by brick. They do not rush. They do not gamble. They construct durable systems that can survive different market conditions. This is how professionals last decades while amateurs disappear after a few cycles. Small edges, repeated consistently, create extraordinary results over time. That is the power of combination. That is the power of discipline. And that is how the minority builds lasting success.